TradFi continues to push all-time high after all-time high. Meanwhile, crypto looking weak as shit, like it is about ready to dump at any moment. We'll be discussing that, the latest from Jerome Powell, and much more today on Money Never Sleeps. Thanks for joining us today, folks. As we get going, do us a favor, hit that like button. If you haven't yet, subscribe to our channel, and remember that nothing that Kevin or I say is financial advice. So please do your own research for making any sort of buys or sells. Kevin, how are we doing today? We had, we've had 2 days now of Jerome Powell testifying on Capitol Hill, and I feel like not much has changed, but the markets are still very enthusiastic.
Oh yeah, markets are devoid of any type of fucking reality. We're in that place where they've already shot up so much and we're seeing low volume. There's only one person that could be coming in to save the markets, and it is retail. And who are they saving it from? People who wanted to offload tons of bags. What Powell said in the past 2 days, I think is very interesting. Some stuff today, not so much. Just the only thing that was really, noteworthy is what he talked about when he was discussing the last time he had a meeting with Biden. I thought that was very interesting because it's like, well, I think that he should probably, given that there was also a banking crisis last year too, you'd think that there would have been some, type of connection there where they would discuss things. Clearly didn't. But it seems like he is in a really hard place, and the markets think that that means rate cuts are coming soon, but I don't think they understand why those rate cuts might be coming. So we're in this euphoria stage, and it's also, I think, the denial stage that nothing bad could ever happen.
Yeah, he reiterated that, while they've made progress on inflation, he's not super confident, or not very confident, that they're going to continue that trajectory down to 2%. There could be a rocky road ahead, and we're seeing a path to that with oil continuing to, oil rebounding from a little bit of a sell-off, starting to come back up. It's been oversold for a while, but with all of the travel this summer and people flying, demand for oil is going up. Prices there, that is going to impact inflation. Yes, they strip it out in the core numbers, but it still impacts it in other ways. Has an effect on PPI and all that stuff too. So all those things it always trickles back to the consumer. Let's just be real about it. Like, these big companies are not going to bite the bullet. They're just going to keep passing those costs on. So you can see where the rocky road can be for this fight against inflation. And, he's not committing to anything. And we know that we knew that was going to be the case. We knew that he wasn't going to tell them when they were going to start cutting. We knew that he was going to say that they'll continue to be data dependent, blah, blah, blah. As I look at some of the CME futures for rate predictions, pretty much all of it guaranteed that that they still keep rates the same at the July meeting. There's going to be a lot. I think there's going to be, between now and the September meeting, we got 3 CPI prints, 2 PCE prints, bunch of employment reports. So I still think that September is going to be when they cut. And I personally believe we're going to see 3 cuts this year. I think September, November, December are when we see interest rates come down. So I think the markets are heading in that direction as well. That's why we're seeing a lot of excitement out there. Once again, NASDAQ over 5,600, or sorry, S&P over 5,600, NASDAQ over 20,600. Just so much exuberance. And you look at these, everything's overbought. Everything is just a vertical line straight up. It doesn't make a damn bit of sense. At some point, there's going to be a correction. But once again, that comes back to timing the markets, and shit, man, I don't know at this point.
Yeah, let's put it this way. I've been bearish for quite some time, and this has been very exhausting to see, right? The markets have just been going vertical. None of the technicals really mattered. That's why I kind of got away from technical trading there for some time, because in these mania topsies, everything rallies. No one knows anything. Everyone's a fucking idiot And it's the truth, because all you got to do is buy, and then everything, the next idiot will buy in, right? And that's kind of why you can't put the monetary system on par with whatever the equity markets are doing. Uh, there's logic that you can apply to the monetary system. You can see when there are things that are problematic, such as the yield curve inversion. You could talk about, collateral. There's a collateral shortage out there that makes things harder for the treasury market, for some of these institutions like banks to be able to make good on some of their repayments. You can't apply that to the equity market. It's a Ponzi. You're selling from one person to the next on what their expectations are that things are going to get better. And this narrative that we're going to see some type of soft landing, the rate cuts are good. You can't argue with that one bit. But the good thing is retail's in. We know that. And that's not a good sign. I agree with you 100% that I think that September is going to be the rate cut. Logically, that's when we should start seeing the rate cuts. I think we're going to see nonstop rate cuts. So I guess I'm more in line with what Citigroup is saying too, that we're going to continue to see maybe -25 for the next so and so months till we get back to zero. I do think that we get back to zero, and it doesn't matter for the inflation at that point, because I think by that time we'll see the labor market in such a bad place that no one's going to be able to have the credit to borrow on that debt at 0%. It's going to be institutions that are kind of rebounding from that. So I think that September is going to be a very key month. I'm not bullish on September.
I'll have the credit to borrow against that. We're just going to be borrowing so much.
That's the best time to fucking do it too. Not financial advice.
Jweb Incorporated. Look the fuck out.
I wouldn't blame you, man. That's what they did back in 2020. Why not do it again when they're doing it, right? But the key thing is, I do think that September is not going to be a bullish month. If anything, I think we see some problems towards the end of this month. I think August is going to be very, very confusing. I don't think the markets are going to know what to do in August. I think right around that, the 20th, or if we still have political instability around the convention, there's things that could cause the markets to get scared. Because again, I think what they're pricing into is that there's going to be some type of turmoil. Do they believe? I mean, let's just go into Biden right now. Do we think that Biden's going to be president for all 4 years? Do we think he might step down, maybe because he's getting a little bit too old? Is there the 25th? There's a ton of questions we could have, right? And then you're pretty much betting that the VP would end up taking over. So there is a lot of instability that can come around that date. I think that's problematic, but there's also just a lot of things in the monetary system that are getting far beyond overstretched, that are going to be problematic. We'll look at Japan in a few minutes, but that's one where it's just like any day now, this thing could just absolutely go tits up. And that means game over for everyone. Doesn't matter what market you're in, Germany, US, UK, all it takes is one domino to fall at this point.
All right, let's talk about some of the top movers in the equity markets today. You got NVIDIA continuing to push up a little over 2%. The other big tech companies, with the exception of Netflix, are all green on the day. Speaking of NVIDIA, our boy Jensen keeps on selling stock. He's now up to about $250 million worth of stock sales for NVIDIA just in the last couple of months. So pretty wild right there. But you know what? The price keeps pushing up. Retail has come in. They see that price. Oh, it was at 1,000 before, or 1,300 before. Now it's on a 134. It's going to go back to 1,300. Let's buy.
The worst part is you're seeing these fucking assholes on CNBC, MSNBC, CNBC, Fox Business, Bloomberg, and they're all saying, no, it's possible for NVIDIA to be a $6 trillion company. It's like, in what fucking world where inflation's 50 fucking percent, rising month over month, are we going to see that? But yeah, I mean, that type of mentality gets retail sucked right back in. We're saying that this was a pretty technical trade. We're looking at this on the daily. These are not necessarily the most bullish of candles. These seems like desperation, exhaustive candles, but it's up higher than it was the day prior. Let me get in before it goes up again. It keeps going up again. The guy in CNBC said that it's going to go to $6.2 trillion market cap for the entire NVIDIA. That means that's a 2x from here. Guys, good luck. Whenever I see a CEO selling, in such quick, rapid succession, kind of tells me that maybe they're not the most inclined to kind of ride this wave without taking some profits. Clearly, they're taking profits. I believe it was Citigroup who said it's time to start taking profits on the AI bubble. you've had a really great run. I mean, Jweb, have we not had a great run in Nvidia? And again, we've had a great run here. We had a great run here, and it just keeps going up and up. And it's absolute insanity how far you are from the 200 and the 50 moving average. These things are not the most stable of patterns that we can see. There's a lot of them. I mean, we look at Apple, unsustainable pattern that we're putting in. I mean, how many days of green have we been? We went from 211 all the way to 231 in a matter of about a week. Tesla.
Yeah, we're looking at 7 straight winning green sessions for Apple. That seems.
I mean, Microsoft, Amazon, Meta. And again, here's the thing. These are all they've never looked back. And there's been a few times when we've seen this. 1929
Tesla as well on absolute moon mission there, and it is at 100 and 100 on the stochastic RSI on the daily. So,
yeah, look at the weekly, 198. It's the most overbought it's been.
Yeah. Oh man.
It's on the weekly. So I mean, that shows you that the amount of price action that we've seen that pushed it up is very weak, and that tells me that this momentum is more so just a squeeze as opposed to an actual rally. And that's not necessarily great. And that's why I point to August, September being problematic, because these things will unwind. The question is, how fast can retail come in to buy from those who want to offload and see some of that distribution? And we're seeing these mania rallies all across the board. And we haven't necessarily seen this yet in the Dow, but it's still possible for the Dow to rally once again. I think there's like a historical level. It's like a trend line that spans over 100 and something years. Let me see if I can find it on the monthly. I can't find it on the monthly. There's a specific chart. I think it's a logarithmic chart that I know, big words, that has a line that goes all the way through it, and you can see that it's 100 and something year trend line, and we're very close to touching the top of it, which would be 41,500. If we get there, then the S&P, and I believe the NASDAQ maybe have broken that, have all hit the key level of resistance. And usually when you hit key levels of resistance, you start to see a pullback. I think the last time we hit that chart in the S&P was 2020. There's just a lot of things that are just so extremely overbought, and retail's coming in. And if we look at across the board, I mean, the S&P volumes, let me see if I can put this on the daily. We're just getting extremely exhausted, right? Price keeps pushing up, and volumes keep dropping. If we want to take even a look at the VIX.
Dude, I'm just real quick. I'm looking at the cycle low on NVIDIA, and from the cycle low to where it is currently, back in October of 22 to now, up 1,028%.
Yeah, I mean,
that's so stupid.
It's ridiculous, man. And we live in the era. I remember in 2000.
God bless anyone who bought at the bottom there too and has ridden it up. Like, good for you. Like, congrats on that.
Absolutely. Like, I'm not mad one bit for anyone who was able to ride this train. Like, this is a fucking amazing run. I hope I can get into a trade like you did, NVIDIA, at some point. I'm not going to do what retail's doing right now and buy up here. I think I'm going to wait till it's a little bit lower, at least when we see an actual correction. We're seeing, I think, Mike Wilson from, I forget who Mike Wilson's from. Maybe it was with JP Morgan. He stepped down, I believe, though. But he said he expects a 10% decline in the S&P 500. That put us around, 5,000 or so. It's still, I mean, it's a sizable correction, but I still don't think that's where we're going to be heading. The thing I wanted to show was what happened in 2020. 2020 was the last major time we had a really good run up outside of, this shit back in 2021 when we had all that stimulus, because we're not getting stimulus this time. And if we do, we're not getting stimulus. It's going to go to the institutions, remove the volume here. It's just a really insane rally. I believe this is, let me see what this rally was here. Right now we're sitting at about a 10% rally from the low, and this is about 5.53. So this is it's a really interesting place to see where the S&P does end up. But don't forget, something like this can definitely happen. And I think this is kind of the base case that we have for the markets that we've created, with how much money has been printed and how much has been leveraged and how much of these stocks are weighted in these indexes. That's, one bad turn, say something like what happened in 2020, doesn't have to be the same situation, but something that spooks the markets and spooks mainly those top 7 stocks, which account for 33.4% of all the concentration in the S&P 500. Well, then, say those drop 50%, over the course of a period of time, we're looking, we're going to probably blow through all these levels of support, especially if it happens in a fast period of time. Obviously, that's timed with the VIX itself. So right now, enjoy the rally while it's here. That's all I could say. I'm not bullish one bit. I don't like the divergences that I'm seeing. We have the historical ones. Been saying that for a long time, but I also think that this period that we've been in, from 2021, end of 2021, so like 2022 to where we are currently, might be the most difficult market in the world to navigate logically that we've ever seen. And I think maybe the last time they would have been this crazy would have been 1929 or 2000. So that being said, I think that after everything clears out and we get back into a place where, rates are at a normal level, not 0%, also not 5.5%, there's a really good chance that we could have a sustainable market. It's just right now we're still dealing with 0% to 5.5%. And the flip that we've seen from how much money was printed during that time, how much debt was created. Now we're seeing that, complete cold turkey shock of, all right, no debt's being created now. So we're going to get to a point. It's going to get better, but I just so fucking do not trust this market one bit up here. And I can't wait till we get to a little bit more logical of a market.
Yeah, we'll see when that is going to happen. All right, so tomorrow morning, CPI for the month of June. Do you think we're coming in? So expectations are 3.1% year over year on the headline, 3.4% year over year on the core number. Do you think we're coming in above, below, or at expectation?
I have no idea. I'll be honest with you. I think we're in a more deflationary period. I think Powell also kind of hinted at that too. Maybe he doesn't know the numbers exactly, but maybe he sees something in the data from last month that we are getting to a point where, things are starting to slow down. I could see inflation come down a little bit. I don't necessarily buy the demand thing either. I think it's just more of lower the supply, it increases the demand on some parts of the economy. So I wouldn't be surprised if we get a cool number on the CPI headline, but the core comes in maybe at expectations or maybe a little bit hotter. It's going to be a very tricky place to navigate. And I don't think the market is going to react rationally one bit, but I could see a headline number coming in cooler but maybe major signs of slowing down in the economy from that. It's just, it won't be the headline number that tells us that.
Yeah, I think it's going to come in under expectation on the core number. Just looking back at we've had the last few months, PPI has been coming down. I think it's going to continue to kind of move in line with that. So last month's core PPI number was 3.2. I mean, not financial advice, blah, blah, blah. I wouldn't be surprised if core CPI was around that 3.2 number, 3.3 this time. So I think the market will respond favorably to that in the short term when we get the PPI number on Friday. Yeah, I know. Hey, who could see that coming?
Yeah.
I think we're going to get, and I'm looking at the core PPI expectation, month over month is supposed to be higher for the June reading. So it could be a small win. I think we're going to get
that's the case.
Huh?
The subtext of that, it's a big L. The headline of that is a small win. But slowing down the economy is not a good thing one bit.
No, so I think we're going to get an under expectation core CPI number today, and it's tough, man. This is why I'm not a believer in trying to time these markets, because so much. I feel pretty confident in that expectation, but I could just be. We could get it at 3.5 tomorrow, and then I look like a total moron. Which it wouldn't be the first time, and it won't be the last time. So that's kind of where I'm sitting at with my expectations for the CPI print bright and early tomorrow morning. We'll see how that one goes. Let's look at a little bit of crypto before we wrap it up for the day. We will be back tomorrow instead of Friday. We'll talk about some of the inflation data that comes in, look at how the market is responding. But before we wrap it for today, let's head over to crypto. We are seeing a little bit of a pullback at the moment. We were up higher earlier today, still green on the day, but we've given back some of the early gains. Bitcoin got over 58K at one point. It's now back to in the mid 57 range. dominance is down a little bit there. We do see, the altcoins continuing to give back some of those gains. Also now red on the day. Let's start with Bitcoin. We're seeing it move there. If we're looking at you're looking at the 4-hour chart right now.
Yeah.
What has caught your attention on that particular chart?
A, B, C. I think we're almost done for the correction. We could get an overextension in this C wave, which is very possible, which is meaning maybe we go up a little bit higher. And this 200 right here on the 4-hourly, which by the way, we're below the 50 and the 200 on the 4-hourly itself. But that would kind of coincide with what we're seeing on the daily, which is around the 50 moving average or so. So maybe we have the strength to push up. I'm not holding my breath for that one bit, because on the daily, we continue to see this hammer down. Once we get above the 200 moving average, that's not bullish one bit. That is resistance. Could tomorrow prove that we could push up a little bit higher if the number comes in better? Maybe retail comes in, buys some more crypto. I definitely believe that retail could push up the price of Bitcoin, say from here to there, which is about 9% or so. Maybe even less than that. I think 60 is honestly a pretty good level of resistance itself too. So maybe, 5.91%. I can see crypto having a day like that. It's very possible, especially with traders, whales, sharks, all those trying to get the market to move one direction. Not the bands, just the actual direction of the market where liquidations lie. So this is the key thing, the resistance on the 200 moving average. Quick jump above it, retest, and you lose it. And well, we're going much lower in terms of this. We'll finish probably half of the Mickey Mouse pattern if that's the case, come down to about 51,000. If that doesn't hold,
no, McDonald's pattern, not Mickey Mouse.
McDonald's. I meant to say Mickey D's. I'm stupid. Same fucking thing. They got rats in both those places. No, I'm just kidding. That is false. I'm not saying anything bad about McDonald's.
Don't spread any disinformation, please.
No, McDonald's is cool. I'm just having a bad time with the stock right there. But yeah, that was just a joke. Nothing serious. Coming. Gotta watch myself. Coming down here, 49K, that doesn't hold, then obviously you're coming down to about 42 and a half. So there's your levels of support right here. Pushing up, like, let's be optimistic
42
here.
Like I said, 42.5% is right at the bottom of that golden arches pattern, buddy.
Absolutely.
On the weekly.
And what happens when we get there? Are we gonna have a pretty good bounce? It's very possible we have a really good bounce. Or what we see is a further continuation, get under that 38K sell off in the ETFs. We saw a lot of inflows with what's been happening with Germany on the IBIT front. They pretty much had no outflows, all inflows the days when they were buying up a lot of those Bitcoins that were on the market. The interesting thing that I heard that's I'm not necessarily sure if this is positive for the market or not, but the reason why Bitcoin's price dropped so rapidly is because they were trying to find people to buy in fiat. So the pairing that the German government was selling was BTC USD, or whatever fiat they want, BTC Euro, whatever. And it wasn't necessarily in stable coins. It shows you that this market might be a little bit more illiquid than you initially thought. And if that's the case, we do get some type of bad news, or we see some type of correction, we get past a certain level and start seeing major liquidations, then, maybe that stable coin push that we got back in October of last year that, got us from down here, it's 27K all the way to about 48K in a matter of 2.5 months. Might have to question that a little bit, but yeah, those are our levels. Could have pushed up a little bit higher. Yes. Major last line of resistance, I think that we would test if we did push up higher than this though, is 63,000. But you would need a lot of, you need fucking good news and unicorn to get you there. So that's what I'm seeing on the Bitcoin front. Let's take a look at ETH real quick. 3101.
What the hell are these your little catchphrases you come up with, Kevin? It cracked me up.
You love that one. Yeah. You should get that one on a shirt. Tattooed. This is again, it's very similar under the 200 moving average. It looks like it's pushing up above it today. It's up 1.11%. Make a wish. It seems like same scenario, I would say. I think Bitcoin and ETH obviously are relatively much stronger than the rest of the crypto market. I think the altcoins will give back a lot of the gains that they've made. Like looking at the stochastic RSI on the daily for ETH USD, sure, there's plenty of room to the upside. I believe Bitcoin as well has a very similar. Yeah, Bitcoin has still some room to the upside. But let's take a look at total 3. It's not as bad as I thought it was. I thought it was going to be a lot higher. But still the amount of price action that you've made, and you haven't even tested the 200 moving average or the 50 moving average, should be some cause for concern. So could we push up to the 200 moving average again? Yes, absolutely. I mean, if we even go into the 4-hourly, see what those patterns are looking like. A,
God,
B,
might play
maybe a
that
little
death cross video soon.
very soon on the entire total 3 altcoin market, just excluding ETH. So that'll be fun. But yeah, these are closing in, so I would expect some type of rally. If there's no rally, then watch out. Then we're just expecting pain to further continue. But where would we go? Obviously, down to $511 billion would have been a really good level of support. If you lose that, then you're probably coming down to somewhere around 456 billion from where we currently are. That is 56, right? Yeah, so that's about a 20% drop in the alt market. So take a look at Link. That'd be $2.40 just on average. Say that. Let's see, $2.40. Where's that put us? Puts us around 1013. Look at something like Matic right here. Matic. All right, here's the thing. Matic, if Bitcoin drops a significant amount, say to that 38,000 level, Matic hits 30 cents. And, I know our bet's over, but 20% puts us
That's
at
long over. That was over years ago.
6 or 7 months ago. 20% puts us at 40 cents, but there's no support at 40 cents. There isn't.
It's going to
we
a
don't
dime.
have.
Okay.
I mean, I would love it to go to 5 cents, 3 cents. I would buy up so much Matic if that was the case. Why? Because it's a high conviction bet that we're going to make some type of return on it. But we get under 30 cents. I can't tell you where this thing's going. I really can't. I don't know where it would go. So that's the thing that's really important, how strong Bitcoin is against a lot of these alts, because a lot of our targets that we had could absolutely get decimated. Bitcoin drops, say 60 something percent in the worst case scenario. Well, then alts are going to probably bleed like 90%. It's something that you have to keep in mind. So, and everyone says the alt season, and they're saying this, and I know Capo's very bullish on alts. It's like you have to think about the greater situation that we're standing right now in the economy, that anything could possibly happen. And without the creation of debt, you're not seeing that same money that we saw in 2021, 2023 that was flowing in and buying every dip. It's just not there right now. And the alt market, I think, is the one that's going to give away the game before Bitcoin or Ethereum even have the chance to go down, to the yearly open or anything like that, or even the October lows of last year. So what I want to say before we wrap up is something that is going on in Japan, which kind of I hinted at the beginning of the show, and that's their equity market. I don't know if anyone's been paying attention to this, but this has been fucking crazy. This is the Nikkei. And look, this is the double top that we thought we got. We rolled over. No, it wasn't done. Look at this. From
Far from done.
The 17th of June to where we currently are, the Nikkei has increased 11.08%. It has gone up, what is that, 4,168 points in the market. And look at how many it's gone up each day. This day, 208, 368 the next day, 493, pull back the next day at 325 down. But then you get this green candle, 443, 506, 332.
Where's the yen at right now?
799, 251. Yen, oddly enough, right back to where it once was, getting close to that 162 level. They intervened, and the market just
that
pretty
upper
much,
trend line. Where would that extend out to?
This one right here.
Yeah,
this one doesn't even matter anymore.
Yeah,
that one's dead. What we would be in, if anything, would be ascending wedge.
Kevin, I think it's time for you to put some of your, with how strong the dollar is to the yen, put some of your sideline cash. Maybe go spend a little time in Japan, get deep into the economy over there.
I'm going to tell you this, from all the research I've done in Asia and in other parts of the world, I don't want to go to any of these places unless, probably live like a king with some USD, put into, what do you call it, swapped out for their currency. But right now, I'm so tired of the Japanese Bank of Japan and all this data that I've gone through that I feel like I've lived in Japan for like 40 years at this point. I'm just happy. I just want to go somewhere where there's woods and no charts. But at this point, looking at where the yen is, the thing that would turn this into an absolute catastrophe, a shitstorm, is if they do raise rates, and if inflation continues to rise. And we see in Asia, we have this major divergence where we're seeing deflationary pressures in China. Their CPI and PPI came out yesterday, and then you look at Japan, and the price of goods continues to go up, and the yen keeps getting weaker. Something's going to break. And once it does, I think you're going to see a lot of the money that flowed out of China that went into Japan start to flow out of Japan and go somewhere else. I have no idea where. I think that's when everyone's going to panic and you're going to start seeing these currencies get stronger against the equity market. But that was just something I had to bring up because Japan's been on an absolute mission for these past 2 weeks. And at some point, something's got to give. And Bank of Japan's doing these interventions, but nothing's working. So I don't know if they're trying to save that one bank that I can't pronounce, Chicken, whatever it is, the derivatives market, ARM, SoftBank. There's a lot of things that are just underweight in Japan. And, you know, the worse the yen gets, the higher the equity market's going to go. But it also makes the situation way worse for these institutions that are underwater.
All right. That is going to wrap it up for today's show. Appreciate those of you who joined us. If you haven't yet, like, subscribe, comment, all that good stuff. We'll be back tomorrow for an abbreviated episode talking about the inflation report that came in, implications it's going to have on the markets, and all sorts of other good stuff. So thanks for joining us again, everybody. Have a great rest of your day. Stay safe out there, and we'll see you tomorrow.
Take care, everyone.